Hey, happy Monday. Thank you for tuning in. Once again, your man Omid here with you to try to get you smarter than the guy next to you and bring you up to speed as far as what's happening in our marketplace for this week. I've got some great news, so hang in there. Um, Last week's bond market rally continued on to this week. I'll explain all the reasons in a second about why that is happening, but we've seen a beautiful step up, which has meant bettering of mortgage rates. Thank the sweet Lord, because we sure did need it, didn't we? We have here an overbought position right now on the statistics. Gives me a wee bit of a concern because anytime you see that, typically bond traders will do what's called profit taking and take the money off the books. But let's see how long this rally can stand. As we shift over to this week's rates versus last week's rates, 701 for last week, 682, about 19 basis points better. Maybe call it a quarter point better from last week to this week across the board. Only 17 basis points on the average for the jumbo. Remember, these are average rates, not the rates that you will actually receive because everybody's rates are different. And so definitely get a hold of your loan officer or call me if you want accurate rates. Okay, now what's happening this week that could change any of this? Let's jump into that. Retail sales comes out on Tuesday. In my opinion, that's an important report because it gives us a glimpse of what future inflation could look like based on how much money we're out there just spending away, especially on credit card debt. Again, I hate to sound like a broken record here, but credit card debt is at its absolute highest we've ever seen at just over $1.2 billion. And so folks are out there spending, and unfortunately, that's a storm waiting to happen, but that's a different story for a different time. National Association of Home Builders Home Price Index comes out on Tuesday. Wednesday, housing starts and permits for how many homes will be delivered 19, 24 months from now. Mortgage applications, what kind of appetite do people have for mortgages these days? Thursday, initial jobless claims, always an important one to see, how many jobs, how many first-time filers for unemployment benefits have been done, and nothing on Friday. So back to this. Why are we seeing that climb, you ask? Well, so as we get back over here, we can see that the home price index, HPI, came out last week. By the way, any of you who follow us on our Instagram account, you'll see that you would have already been in the know on this. So if you don't follow us, definitely follow us for short stories during the days when these reports come out. That way you don't have to wait until the next Monday to figure out what's going on. Okay, so the headline report went down 0.1, so 0.1%, as I had predicted. I didn't predict this, that the core was actually going to go up. Now, here's the thing. The actual effect is 0.06, but these guys always round up one or round down one. So here's the good news. The year over year number, last year this time to this year this time, 327 to 298. So that's fantastic. That means that we're going in the right direction, right? So at the end of the day, really kind of what's happening here and what it is that we're seeing. Remember, the Federal Reserve has a mandate of trying to keep this thing at their arbitrary 2% rate. Why is that important? You're going to have to ask them. However, if we're sitting at 2.98 now, that's awfully close. That's the closest we've been in years and years and years. So this is good news. And that's why mortgage-backed securities are enjoying and rallying. Now, as I've always said, the minute that these rates start to kind of sink down, and who knows how far we can go down with this rabbit hole, do we see mid-sixes? Do we see low sixes? Who knows? But this is when we're going to get a bum rush on the available listings. And I know right now the sentiment is, oh my God, I'm not going to buy a house now because prices are going to continue to go down. Well, there's lots of sellers, myself included, who had listed some properties that were a little bit heavier on the price, sat on the market for 20, 30 days, and have been reducing it. So we're seeing a fair amount of price reductions, but that doesn't mean that this $30,000 price reduction is going to turn into $300,000 of price reduction. I don't see that happening, and I'll back that up by telling you this. So activity of housing inventory for sales compared to pre-pandemic levels shifted between 2019 and June 2024. So in the 4 states that I am licensed in, so that would be Washington, Oregon, California, and Texas, and now also Arizona, the only states that gave us any relief for inventory was Idaho and was Texas. As you can see, everything else is still considerably below its pre-pandemic volumes. Washington State included, Oregon included, California included, Nevada included, Arizona included. And so I think this is the part that we have to be careful at, both as real estate professionals as well as consumers, home buyers watching this. Don't get fooled by this stuff. We're still not in even where we were in pre-pandemic levels, which even then we didn't have necessarily a buyer's market. We were, I think it was 4.5 months worth of inventory at that point. Currently, we're sitting right above 2.5. So this is still very much so a seller's market, but our thinking has shifted, and that's the thing that we all need to be aware of. Okay, so remember, at the end of the day, what wins the offer is how it's packaged and put in front of the seller as compared to how other people package it and put it in front. But probably the most important is, how sticky are you yourself as a buyer? How comfortable are you? And if you're uncomfortable with the payment, etc., not a whole lot we can do with the price per se, but we can sure do a lot with the mortgage financing and how we structure that loan for you. So if you're stuck on any of that, pick up the phone and call me. No harm, no foul. We'll do a quick little 15-minute conversation, and we'll find out exactly what's going on with you and how we can structure something to meet your payment requirements. So when you buy a house, you can go to sleep at night, because that's very important. Okay? Have a fantastic week. Reach out to me if you need anything. As always, please do subscribe, like, and follow us on this, and share this with somebody, because we all know people out there who need the truth behind what's going on out there. Okay? Take good care. Bye-bye.